Adobe stock is down more than 60% from its all-time highs, yet the company is generating over $23 billion in annual revenue, over $7 billion in profit, and trades at a P/E ratio of just 11.8. So is Adobe becoming a value trap, or is Wall Street missing a massive AI comeback story? Today, we'll break down Adobe's chart, fundamentals, recent AI developments, and whether ADBE could be one of the most undervalued tech stocks right now. Let's get started. Looking at the chart, Adobe remains in a clear long-term downtrend. The stock is currently trading around $207. Since 2025, Adobe has been forming lower highs and lower lows, which is the classic definition of a bearish trend. Right now, the major resistance levels are $220 to $225, $240 to $250, $255 to $260. On the downside, the key support zone sits around $195 to $200. As long as Adobe remains below the $225 resistance level, the bears are still in control. However, the stock is now trading near a major historical demand zone where long-term investors may start accumulating shares. Many investors are asking the same question: why has Adobe been declining despite reporting strong earnings? The biggest reason is AI competition. The market is worried that tools like ChatGPT, Midjourney, Runway, Canva AI, Figma AI. Could reduce Adobe's dominance in creative software. Investors fear that AI-powered design tools may make content creation easier and cheaper, potentially threatening Adobe's pricing power. The second reason is slowing growth. Adobe continues to grow revenue, but growth is now around 10% to 13%. Compared to AI companies growing at 30%, 50%, or even 100%, investors have shifted their attention elsewhere. The third reason is leadership uncertainty. Recent management changes, including CFO transitions, created additional concerns among investors. As a result, Adobe's valuation has been compressed dramatically. Now let's talk fundamentals, and honestly, this is where the story becomes interesting. Adobe currently has market cap $83.80 billion, revenue $23.70 billion, net income $7.10 billion, EPS $17.50. P/E ratio 11.8. Those numbers are extremely impressive for a software company. Historically, Adobe often traded between 25 and 40 times earnings. Today, investors can buy the stock at less than 12 times earnings. That suggests Wall Street is pricing in a lot of bad news. But here's the surprising part. Adobe's business is still growing. Recent quarterly results showed revenue growth of 13%. EPS beat expectations. Raised full-year guidance. AI annual recurring revenue exceeding $500 million. That's not what a dying company looks like. The biggest bullish argument for Adobe is AI. Adobe Firefly has become one of the fastest-growing AI products in the creative industry. Millions of users are generating images, videos, and creative assets using Firefly. The company is also integrating AI across Photoshop, Illustrator, Premiere Pro, Acrobat. This creates a huge advantage. Unlike many AI startups, Adobe already has millions of paying customers. If Firefly continues growing and AI monetization accelerates, Adobe could surprise investors over the next few years. This is exactly why many analysts remain bullish despite the stock's recent weakness. According to analyst forecasts, current price around $207, average target $275, bull case target $460, bear case target $190. That means analysts see roughly 33% upside on average from current levels, and in the most optimistic scenario, the stock could more than double. So, should investors buy Adobe stock today? In the short term, the trend remains bearish. The stock needs to break above $225 before a major trend reversal can be confirmed. But from a long-term perspective, Adobe looks increasingly attractive. You have strong profitability, massive recurring revenue, industry-leading software products, growing AI business. Historically cheap valuation. If Adobe successfully monetizes Firefly and proves it can win in the AI era, today's price could eventually look like a bargain. My base case target for Adobe over the next 12 to 24 months is between $260 and $300. And if AI adoption accelerates faster than expected, much higher prices could become possible. What do you think about Adobe stock? Is ADBE a value trap or a hidden AI opportunity? Let me know in the comments below. If you enjoyed this analysis, make sure to like the video, subscribe to the channel, and turn on notifications for more stock market breakdowns. Thanks for watching, and I'll see you in the next video.